Hi there, good morning. You're watching Chartbusters on CNBC TV 18, the show where we highlight all the buzzing stocks of the day, get you expert advice on how to capitalize and trade on those stocks. It's Monday. I'm Manglam Malu. With me is Nigel D'Souza. Nigel, we liken the 5-day market to a 5-day test match. First day, ball swinging around. So people are a little defensive, so to say, watching the ball and hitting the odd one out for a 4. Odd one would be something like the auto stocks. The defensives would be the IT space and the FMCG space.
Well, Manglam, talk about it. I think the first couple of overs, the way it was moving around, the market started off in the green with a gain of around 90 points, 80, 90 points, and quickly we moved into the red. So it was really swinging around. Now, in fact, it appears the batsmen have got their eye in, and the bowlers, well, they'll come back, for a second round, looks like. But in terms of levels that we're looking at, 20 DMA, that's important on the downside. And, Friday's low as well will be an important mark. But on the upside, 11,350, it seems the bears are waiting out there. They're waiting to pounce onto that level once, in fact, we get to that. Well, we'll talk about market levels. We'll also get you the management of Hindalco. First up, let's run you through all the top stories. Glenmark Pharma, that's higher in trade, but off the day's high on the back of a strong showing in the first quarter. The management says they'll maintain margins at around 19 to 20% for FY21.
Sun TV trades at the highest point of today's trading session. This despite weak numbers after the management tells CNBC TV 18 that ad revenues are actually currently at 75% of pre-COVID levels. Brokerages too see valuation support. They're positive on the stock.
NCC2 trades higher in trade despite weak showing in the first quarter. The management tells CNBC TV 18 that they secured orders worth 2,500 crore rupees in quarter one despite the COVID-19 challenges. Adds that they're seeing good improvement in Andhra Pradesh projects.
Voltas is higher in today's trading session, though off the highs of today's trading session as well, after its first quarter results that came by on Friday. Brokerages largely positive. Jefferies say the UCP margin improvement is a positive, while Credit Suisse raises its target to 710 rupees per share.
All right. Well, Manglam, we were talking about Ashok Leyland a couple of days ago, and if the CV space is going to turn, we were highlighting that Jamna Auto could be a potential beneficiary. If, in fact, the CV space is going to turn, if we're going to see attraction on ground for Ashok Leyland, Tata Motors, because bulk of the suspension is, provided by Jamna Auto. The numbers have been really, really weak in the last many quarters because the CV cycle was in a downtrend. If, in fact, that cycle has to turn, then Jamna Auto could be a stock that you should be looking at. And from the low point of the day, the stock has seen a jump up. In fact, from the day that we saw Ashok Leyland's, con call highlights, from that day onwards, the stock was moved from around 32, 33 rupees to around 41 rupees. Now, this we'll have to track because the CV cycle has to turn first. Then, in fact, Jamna Auto could do well. The stock is less than half of what it was at its peak. So just keep that in mind, even after rallying close to around 15% from the low point. So that one should be on your radar. But let's find out the trade on the Nifty. Naresh Mirani joins us for a quick technical check on the markets. Hi, Naresh. Morning. Well, markets holding with a gain of around 40 points odd. We're at around the 11,220 mark. What's the fresh trade? Do we have enough in it to, move back towards the 11,300 mark? Or do you think we'll head down back towards the 11,100?
So we believe we could get into a range of 11,100 to 11,300 for the near term. Because we've seen a candlestick reversal yesterday, but we've not seen a similar breakdown in Dow Jones or global indices. So we would take a risk-reward trade wherein any bounces to 11,250, 270 should be sold into with a stop loss at 11,300, looking towards the target price of 11,100, 150.
All right, fair point there. You did a nice well left out there because the market's in the middle of the range. Good length, perhaps. We're talking a lot of cricket, but individual stocks, what are you watching out for, Naresh, today?
So the two stocks which I'm watching out for is one is a TCS. This has seen multiple attempts at the 2,300, 2,350 mark over the last, say, 12 to 18 months, as well as in the last few weeks. We expect it to break over the next few weeks going forward. And say at current prices, there's a risk-reward buy with a stop loss at 22.20, with the first target at 23.50 and then higher. And the second one is a buy on Coal India, which is a contrarian buy wherein the stock has made a good base around 125, 130 and saw a good price volume action on Friday. So we expect a move towards 142 and a stop loss to be placed at 130.
Right, Naresh, those are the stocks that you found on charts for our viewers. But a couple of questions. Tata Consumer, that's the stock that, should come up for you on your screen right now, up almost 27% this month. every successive day it's hit a record high. Results were good. Over and above that, EPS estimates by brokerages were increased. And then, we are seeing a big move come by out there, because 30% jump in EPS estimates and management commentary being positive with regards to the synergies means that the stock would be available for much cheaper than what it was earlier in terms of multiples. What would you suggest one should do? Because the stock is at a record high, is it too late to buy right now? What would one suggest chartically?
So if we look at Tata Consumer, the momentum is really strong. But it is highly overbought at current stages and showing RSI divergences, wherein we would expect some pause going forward. So we would expect a pause at 550, 560 on the upper side. And then only once we start going below 500, the trend changes. So maybe one should just stay away from it and maybe look towards a trade only when it comes to 500, 520.
Okay, all right. Thanks so much for that, Nuresh. Well, let's move on then. Hindalco reported a mixed set of numbers in the first quarter. Now, its aluminium business did well, but the copper business was a bit of a disappointment. CNBC TV 18's Nisha Podar caught up with Satish Pai, the MD of Hindalco, and began by asking him about the factors that impacted the past quarter's performance. Let's listen in.
So the aluminium results, as you rightfully pointed out, was slightly better than the Q1 of last year, which is quite spectacular in a very bad quarter like this. And the result was good because we managed to keep our smelters and refineries running through the COVID. The input cost, especially the cost of coal, was much better than we expected. And we could sell 303 KT because 80% of it we exported, which is why lower input costs along with strong exports helped the aluminium business give an 856 crore EBITDA, which was slightly higher than the Q1 of last year. The copper business, as you say, was a little bit negatively impacted because the copper smelters in Dahej were shut down during the month of April and half of May. So we lost half the quarter because these smelters were shut down and they were running only for half the quarter. So which is why, and also the results were negatively impacted because of derivative accounting. If you remember, Nisha, in Q4, I had said that we had 100 crore one-time gain because of derivative accounting. And we got some part of it as negative 70 crores coming in this quarter. So the quarter results, copper results were impacted because the smelters were shut for half the time and they had a one-time derivative accounting negative of about 70 crores.
Right. So copper, capacity utilization is below 50%. So is that going to improve in this quarter?
So it has already started to improve from June and July. And now what we're seeing in August, the demand has come back to nearly 80% of the January-February level. So both for aluminium and copper, Q2 is going to see, I think, demands back to where they were last year.
All right, so demand back to what it was in the last year. That's a very strong statement and a very positive one coming in. But are you also alluding to this when it comes to the global business? You have a large global business as well. So which are the sectors really performing well on that front? And how is the global demand panning out for you?
So of our businesses in Novelis, 60% is can. And can was only about 3% down year on year for the quarter. So the can business was remarkably resilient because when people are at home, they consumed more canned beverages. So the can demand in the quarter was only about 3% down. And in July and August is already back to pre-COVID levels. Then we come to the auto sector. The auto sector was badly impacted in April and May because most of our customers' plants were shut down. And in the month of June started to come back. And in July, the US and China are back to pre-COVID levels. Europe is still a little bit behind, but we can see the pickup coming. So auto demand also seems to have come back. So internationally, what we're seeing is that in July and in August, we are coming back close to pre-COVID levels of demand.
All right. And what is your outlook for LME aluminium prices as well for this quarter? It's starting to recover.
So the LME prices this quarter are back to pre-COVID levels. In fact, you could say even slightly higher. This is largely driven by the positive economic sentiment that most people have. So they see a lot of liquidity in the market. They see various government measures being taken to stimulate the economy. And the general hope is that the economic pickup will be more of a V-shaped rather than a longer drawn-out affair. So this hope of consumption and economic growth has driven commodity prices higher. The other thing is people are looking at China, which was first out of the gate, and they have seen the Chinese economy rebound very strongly, and that the growth in China has also been, in fact, our automotive shipments are up year on year in the months of June, July, August. So people are, I think, expecting a much sharper economic recovery, and hence commodity prices are also quite high.
All right, so that's a good picture that you're giving, Satish Pai, on the overall economic sphere. But I would also say that given the nature of your business, which is more global, the currency movements will also have a huge impact on your business. Nonetheless, even though the overall business may not do well because of the pandemic situation, but the finance charges, Satish Pai, doesn't change. What is your outlook on the debt that you have on books? The net debt stands at 62,000 crore rupees. Is there a refinancing to really lower the costs going forward? And what is your plan for reduction there?
So first, let me address the debt level. So as soon as we closed the acquisition of LRS, we added 2.8 billion of debt. And we had always said that the net debt to EBITDA would then go to about 3.8, which it has. Now, we have also committed to the market that that 3.8 will come down to the low threes in the next 2 years. Now, how will that happen? It will happen as a combination of various things. We believe that the business will come back and the EBITDA will also improve sharply. Q2 is going to be much, much stronger than Q1. And we hope that the rest of the year is going to be strong as economies pick up. You're also right to say that the market is very attractive. Interest rates are low. There is a lot of liquidity in the market. And we are going to look at every opportunity to bring the cost of our debt down as well. So as a combination of getting the cost of debt down as well as doing higher EBITDA, we will bring the net debt to EBITDA back to the low threes is what we are coming to.
What was the timeline for that?
So we said that we would be within 2 years of the acquisition.
Yes,
so
you had said that earlier, but is there any change in that?
Absolutely not.
Okay. All right. And finally, about Duffel as well as the Lewisport plant sale. What are the timelines for those two? And Duffel has been held up with the Chinese regulators for a very long time. When does that particular bit expire? Is there an expiry date for getting that approval?
So first thing is that, the European Commission is, we are working very closely with them. Unfortunately, the COVID situation has led to a certain amount of delays. So on the Duffel's plant, all we can say is that we are fairly confident that in spite of all these delays that have happened, we will hopefully close the sale during this quarter. And I think on the Lewisport side, we have now started actively working there. And that also, we hope, there's a lot of interest. Many parties have come forward. So we are also hopeful that we can close that sale as well as fast as we can. I think it's in interest of Hindalco and Novelis to make sure that these two divestitures happen in a timely fashion.
Of course, but what about the valuation expectation for Duffel? You're getting $350 million. For Lewisport, what is your expectation there?
So we certainly hope, Nisha, I can't give any expectations. We certainly hope that with the amount of interest we are seeing, the number of companies that have come forward, and also the fact that it is an automotive-ready plant, we certainly hope that we will get a fair value for that plant.
All right, so that was the management of Hindalco guiding for their net debt to reduce from close to around 4 times EV to EBITDA, right now close to around 3 times debt to EBITDA, that is. So we will keep an eye out on deleveraging out there. With that, we'll slip into a short break. But on the other side, we'll get you a handle on all the stocks that are buzzing this morning. There's Glenmark Pharma, there's Voltas, and even Sun TV. More details on the other side.